and welcome to Moneylife. This is Sucheta Dalal. This week I'm going to talk about the gaming bill and the complete ban on online gaming. So let's start with what happened a couple of days ago. At a closed door training workshop for BJP parliamentarians, the Prime Minister Narendra Modi urged his party members to spread awareness about the new gaming legislation, which is being presented by this government as a welfare measure. It is called the Promotion and Regulation of Online Gaming Act 2025. And some of you may even have missed the fact that on 22nd August, with absolutely no public consultation, minimal debate, it just breezed through the two houses of parliament, passed on two consecutive days. On the third day, it received presidential assent, and in 3 days flat, you have a brand new law. Now, our MPs are being told to reassure constituents that this law, which is again, like I said, passed as a welfare measure, is not targeting any harmless entertainment and the teen pattis that they play with, doesn't matter, that is with money. It is only targeting harmful gaming. We don't know what that is. What we know is a lot has happened. The speed of the law, I believe, is largely political calculation. The IT Minister, Ashwini Vaishnaw, who piloted this bill, has said that over 450 million Indians have been harmed by online gaming. It has triggered depression and suicides, and losses due to online gaming are estimated at 15,000 crore annually. Sounds big. According to reports, gaming-related debt led to 32 suicides in Karnataka in a period of 31 months. That's more than 2 years. It's nice when you say 31 months. So the law sailed through, since no political party wants to be seen as defending a gambling bill, right? Because that's essentially what gaming is made out to be. And we Indians are so puritanical, as we know from the proliferation of dry days in the country where alcohol is banned everywhere, even in five-star hotels. But let's look at gambling and gaming alone. India is surely no stranger to gambling. The great Mahabharata epic, which has got a revival of sorts known to every Indian, has its roots in the gambling addiction of an otherwise virtuous king, Yudhishthira, who gambled away his empire and his wife in a game of dice. Things, of course, snowballed from there. Yet, gambling has never disappeared from India. It's only changed forms, and it's existed for hundreds of years. So, until August 22nd, gaming platforms were thriving. Dream 11 was the best known of them. It is India's biggest fantasy sports company. It had secured a 358 crore 3-year jersey sponsorship with the Board of Cricket Control of India and a cricket crazy nation. This happened in 2023. Its logo was on all Indian cricket team kits. But after the bang, things just came to a halt. BCCI terminated the deal overnight and has asked for new bids. The industry, which attracted 25,000 crore in foreign direct investment, employed 200,000 people, and generated 50 to 20,000 crore in tax revenues for the government, was just decimated overnight. The government, of course, doesn't seem to bother, though it should. It defends its stance by citing global research on online gambling's addictive nature. But the ban raises uncomfortable questions about consistency across avenues for addictive behavior and losses. Now, I'm not supporting gaming at all. I don't even understand it, nor have I ever gone and looked at the Dream 11 website. But let's just ask simple logical questions. Why crack down only on gaming apps while allowing state governments to run lucrative lotteries? This is under the Lotteries Regulation Act 1998. Only state governments are allowed to do it. 13 of them run it, make a lot of money, and it's justified by saying this money is used for social purposes. So when the state does it, you can buy a lottery ticket, can be addicted, doesn't matter. India's lottery market is not small. It's valued at 27.37 billion in 2024. And this is a market which was being affected by the convenience offered by online gaming apps. So state lotteries are difficult to navigate. Lots of rules and taxes. And The GST is pretty steep, imposed in 2020. So, in fact, state lotteries had been facing competition from more accessible international lotteries like Euro Millions and Powerball. Now that there's an official ban on gaming, business goes back to state lotteries because many people who probably bought Euro Million or Powerball are going to say, too much trouble, let's not do something illegal. Go back to your good old lottery tickets. So who's the gainer? State government. Now let's look at the real casino. It is the Indian stock market. In fact, it's a far bigger outlet for gambling instincts, much more than gaming apps and lotteries, especially derivatives trading. This activity enjoys the blessings of the government because it's couched in the language of risk management, capital formation, a hedging tool, and it's further sanctified by the fact that it's governed by the Securities Contract Regulation Act, and it's supposed to be tightly regulated by the Securities and Exchange Board of India. Yet, there are staggering numbers of losses put out by SEBI itself, and they expose a grim reality. According to SEBI's research and studies, every year from 2021 to FY 2024-25, 90% of individuals who traded in futures and options lost money. Losses in 21-22 were 51,689 crore, and these were matched by transaction costs that they incurred over and above it, which was 48,000 crore. Cumulative losses in FY 21-22 to 23-24 were 1.8 lakh crore, and here the transaction charges alone were 50,000 crore. In 24-25, the losses were 1.05 lakh crore. SEBI numbers, okay? So losses from derivatives are clearly 5 to 6 times higher or more than online gaming, which was 15,000 crore. Yet, you don't have any overnight bans. Instead, what the regulator has done is you have these pop-up warnings. If you get onto a trading site, it's mandatory. There are token investor education drives, a half-hearted debate about tweaking weekly expiries. Nothing has happened as yet. Meanwhile, big bombshell was SEBI's investigation into Jane Street, the US quant trading firm. It has revealed how this large entity could manipulate the markets, allegedly, and billions of dollars in profits were made by sophisticated global players like Jane Street and taken out of the country. Jane Street, of course, has denied wrongdoing but paid up 4,754 crores and is now in appeal before the Securities Appellate Tribunal. And remember, SEBI is worried. SEBI finds it difficult to control, is going after them as it's done with Jane Street, but it's not alone. India's economic survey for 23-24 also noted that the surge in retail derivatives trading may stem from gambling instincts as it offers the potential for outsized gains, but typically results in losses. And huge losses, 90% are losing money. But you would find this amusing. It is not an Indian issue alone. The gambling instinct is a global problem, probably bigger in other countries. As it happens, this concern about investing beginning to resemble gambling is also a global issue. In fact, on 28th August, The Economist of London had an article titled Gambling or Investment, and it noted how American markets are increasingly resembling casinos due to the blurring lines between gambling and trading. But then again, comparing speculation to casinos is also nothing new. The Economist itself points out that John Maynard Keynes had warned as early as 1936 that unchecked speculation could turn a nation's capital development into a byproduct of the activities of a casino. Vanguard's founder, John Bogle, in 1999, lamented that intermediaries profit most from the Wall Street casino. In 2023, it was investment guru Warren Buffett who observed that markets show far more casino-like behavior than in his youth. This has happened even though the US has liberalized betting for online sports, allowing gaming platforms to create avenues for betting on stocks. This is what The Economist says, and we know that the US is quite okay with cryptos also, which India doesn't like. So in spite of this, you can't control the gambling instinct. A ban hardly controls it. So then why the silence on derivatives? If gaming losses are 15,000 crore a year and this can justify an outright ban, then why are trading losses of over 1 lakh crore annually not treated as a national crisis? The answer may lie in the fact that there are fiscal gains for the government of India. As Devashish Basu, our editor, has pointed out, securities transaction tax collections have grown at 24% compounded annual growth rate in recent years. And in FY 24-25, STT brought in 55,000 crore, of which nearly 40% came from derivatives trading. For the government, this casino is clearly too lucrative to curb, so no overnight bans. Now let's come to the bigger debt trap. Financial distress and huge losses have other causes, not necessarily the gambling instinct. Easy access to credit. In fact, at Moneylife Foundation, which is our not-for-profit entity, and we offer counseling to retail investors who face a debt crisis, we've observed a sharp increase in financial distress that's caused by access to very easy loans that can be downloaded in minutes. People are just getting them. They think they will find money to get out of a desperate situation. Many borrowers who approach us when they find they're fully trapped, they are not just victims of gaming or trading losses. A lot of them have lost money in trading, medical emergencies, and all of it happens because there's such easy credit that they keep borrowing, not looking at the interest rates. They have maxed out multiple credit cards, personal loans, and then the most dangerous predatory digital lending apps, which have extremely high interest rates, which spiral because they get 6 to 8 concurrent loans, and the interest is compounding on all of them at high rates of 27-30% sometimes, or even more. Many borrowers, by the time they come to this crisis point, are unemployed or have lost their jobs or just run out of steam. They have a certain income and the borrowing is such a huge multiple. App-based loans are especially toxic because interest rates compound at punishing rates and recovery practices are so ruthless. In fact, there may be more suicides because of this, but nobody's counting, nobody's finding out. In fact, we've made repeated attempts to alert the Reserve Bank of India to this huge problem, but its response has been glacial as compared to look at how the government has reacted to gaming. At the same time, gaming firms, in fact, have generated jobs, attracted FDI, tax revenue. Digital lenders add very little economic value. They take the money themselves and just leave you with distressed people. Yet, regulation over here lags far behind. It's not difficult to find out. We are pointing it out, but nothing is happening. So, is it a ban or is it a band aid, really? If the government's rationale is to protect citizens from gambling impulses and the ruinous thrill of easy money, then it shouldn't cherry pick its targets. So, lotteries, stock speculation, digital lending are far bigger contributors to financial distress than online gaming apps, but they've been left untouched. So, banning one outlet while ignoring the rest only drives the problem underground. It fuels corruption, creates black markets, exactly as it has done with prohibition of alcohol in the couple of states that have imposed it. What India needs is a holistic approach to financial distress. You have to study all the issues. You have to have tighter regulation of lending, stronger guardrails in derivatives markets, and restrictions on predatory influencers who are luring people, mind you, into speculative trading, telling them anybody can make money and showing off that they have made a lot of money, which is often untrue. Unless all this happens, the knee-jerk ban on online gaming will be remembered less as a welfare measure than as a political gesture that leaves citizens just as vulnerable to losing everything at the next table, whether it's a casino, a lottery, stock market trading, or just being bled by app-based lenders. If you agree, make your voice heard because we need protection everywhere and it won't happen unless you speak out. If you like what I say, please subscribe and spread the word. Thank you.